What's up, social media? Little Nessie podcast here with David King and Ron Stowers. Welcome to our first official podcast. We appreciate you joining. Um, hopefully, hopefully we'll have more than just one or two people join, but every week on Thursday, 3 p.m. Eastern time, Ron and I are going to go live on social media. I made an announcement probably about a month ago, maybe a little bit more, of Ron and I joining forces. Ron Stowers, who lives in Scottsdale. Say hi, Ron.
Hello, everybody.
Ron lives in Scottsdale, and we've worked together at two different companies. I've just got a message that says unable to start streaming. I'm not sure if that is. I think that's just YouTube. It's our second time using this platform, so might be a little bit choppy this time. But Ron and I have worked together at two different companies, Loan Depot and Homeowners Financial Group, and we both ended our employment at Homeowners Financial Group early 2024, and I started my own business, Little Nessie, and Ron became one of my clients. And after 8 months, 9 months or so, we started talking about what he was doing, where my company is going, and we decided to become co-owners, co-partners, partners at Little Nessie. So my background is marketing, has been for the last 15 years as a full-time profession, and probably about 3 or 4 years as a hobby prior to that. And Ron is all about growing businesses, sales, operations. Ron, chime in.
Yeah, I had to say, I always say, I'm a loan officer at heart that got recruited to be a leader, which I'm happy to do so. And as I continue to age in the industry and, and become now an older fellow, I have transitioned into consulting and partnering with you, which is great, David. I'm so looking forward to this next chapter, including things like this podcast on Thursdays, where we get to just get on and interact with the people that are listening. So if anybody's listening, thank you. But interact with people listening, have guests on, and it will just be a lot of fun. And hopefully we can bring something different to this, very, very crowded space.
We talked about this podcast being called Happy Hour with Ron and Dave. We didn't do that, but you never know. We might show up every now and again with a drink in our hands. We'll see.
I like that idea, David.
And then we're going to do a second one. We're going to wait probably about 30 days or so. We're going to do a second one where we invite a guest, a weekly podcast where we invite a guest, an influential person, whether it be in sales, leadership, marketing, whatever it might be. We're going to have a second separate podcast that we probably won't go live on this one, but this one will be live. So forgive us for all of our uh, misspoken terms, words. If Ron says something offensive, which he quite often does when we're on our daily call, but this podcast is going to we're going to bring to you three things every week, and they will typically follow this kind of format. One, what's the biggest news in our industry in mortgage, in real estate, housing? What's the biggest news that's going on? Number two, something marketing, branding, or AI related. And then number three, kind of something that's, I wouldn't call it into the self motivation, inspirational, but some kind of leadership lesson, some kind of business lesson, and we're going to tie all those together to help you improve your business, whether it be referral client, referral business, your actual consumers, and so on. So our first, Ron, why don't you talk about the three bullet points that we're going to talk about today? Give an
Yeah.
overview, and then we'll get into it.
Yeah, thanks so much, David. And the key point here is there's so much noise in this space that hopefully we can bring in unique insights into valuable information while making it somewhat entertaining. And that's our kind of our hope. And Dave, to the point, today we want to talk about the effects of war and conflict on our industry, and specifically what kind of impact they have on interest rates. We want to talk about video and AI, which is going to be a great topic. And then we want to talk about this really interesting concept called the infinite workday. And so there we go. David, want to get started on the first one?
Let's do it. So
All
you're gonna
right.
lead this one.
Yeah. So understand, David and I were talking about this topic because we love to talk shop. And we were talking about, gosh, a lot of our clients are asking us, what's the impact of all these wars going to have on interest rates, on the real estate market, on the stock market? And it's interesting. Of course, there's a lot of talking heads talking about this right now, but the answer is it's nearly impossible to tell. There is not a really clear correlation between war over time and how it impacts U.S. real estate and interest rates. But we can give you some insights and some kind of key learnings. And I think, Dave, you created a chart for this. So what this chart is going to tell you is that there really isn't a clear signal of what happens. But here's what we know pretty confidently. And I'm going to speak historically, and then I'm going to try to put it into current times. Historically, when a war breaks out, there's a flight to safety, and there's no safer place to put your money in the world than in U.S. treasuries, as well as mortgage-backed securities. And so when that fear happens, when the war erupts, and this goes for global money as well as money within inside of our country. It floods to treasuries. It floods the mortgage-backed securities as a safe haven. And then over time, and not a lot of time, it recedes back out and goes back out into the market. And so the benefit of the lower interest rate is typically short-lived. And then what happens? Other forces start to impact the interest rate, including inflation, because wars are inflationary. They're inflationary several ways. One, they actually hijack your GDP as you assign resources that otherwise would be productive into the wartime effort. The other thing is it has a lot of cost to it, mostly usually funded through debt. And all that is very inflationary. So as wars go along, interest rates go up because of the inflationary pressure. And in fact, once they conclude, depending how a country deals with that debt and whether they address the inflationary pressures, inflation can continue to rise. Now, when I say that's historically, what's happened recently is in the last couple of wars, there hasn't necessarily been that flight to safety that we would all expect. And you got to wonder why. There wasn't a giant flight to safety to bonds like we would expect when the war with Russia and Ukraine kicked off, nor was there really last week with Israel and Iran. And I speculate it's because we're getting desensitized to all these wars. There's a headline war now, it seems, every few months, and we're just desensitized to it. And so we don't see that regular pattern. But the other thing I want to just say, David and I researched this quite a bit, getting ready for this podcast today. And one of the things that we found is that the overwhelming influence on how interest rates or housing prices, the markets, how they're going to perform, is what was the current environment they're in. Meaning, if right now in the United States, the Fed is fighting inflation, they're far more afraid of inflation than they're concerned about a war with Israel and Iran right now. And so the prevailing influence is still the Fed's fear of inflation, not the war in Iran and in Israel. And so that's what you want to pay attention to, is the underlying economic conditions going to override whatever the emotional reaction is to these wars. And for the most part, historically, the fact is the current economic conditions win out almost every time, and they win out over time. David, do you have thoughts on that?
Can you think of any of the 5 examples? And I've got 9/11 on there, but that's of course what came after 9/11, Afghanistan, Iraq. Can you think of any of those 5 examples that were the most similar to the current economic conditions we're in now?
You can argue the first Gulf War happened in a time of an inflationary period, and so the cycle you're seeing there, where interest rates came down in the face of an inflationary period, is super positive. Now, what you're seeing in Ukraine, it didn't matter, and it's going to be the same thing with Iran and Israel right now, especially since a lot of the war is making it creating a stress on inflation, meaning that you're now put 15% of the world's energy supply at risk, which is exceptionally inflationary. We've seen petroleum prices go up significantly. I think they're up 15% in the last week. That not only has frontline inflationary, but it has further downstream implications to inflation. And so the Fed's even more worried about inflation. And so you're not going to see that same structure you see under the Gulf War where interest rates improved. But that would be the most recent one. You got to look at when was there where the Fed was afraid of inflation, what happened, right? And that's because that's the conditions we're in, and we don't really have the same conditions we have now. The other thing is we have record debt right now. We haven't had a war where we entered. If we were going to enter the war, let's say, we haven't had a war period where the United States was already at peak debt. Right, you can maybe argue World War I, World War II, maybe with the Depression, the government spending went way up, which hesitated them to go into the Second World War. But we're at a record debt for who knows what reasons, and we don't have capacity to take on more debt, and that extra debt is really going to scare the bond market, and you'll see that. And it's true globally. The greatest crisis will be bond vigilantes. That is, the buyers of bond being unwilling to buy the bonds. That would be a global collapse, and that's the thing we have to pay attention to more than these regional, even somewhat global conflicts. Crazy enough as it sounds.
When we were talking about this just yesterday or the day before, you said not a lot of people in the industry and the news circles are talking about this because there's other major factors. What would you say are the top three to rates?
Yeah, it's interesting. I think why you have a lot of noise in the media and in our specific industry media, but the fact is there's no true conclusion to draw. So it's like when you and I were going to talk about this, I was somewhat apprehensive because we don't necessarily have some, spotlight insight that is absolute. Now, the pressures on interest rates right now, and here's the thing, and David, and I know because you read my articles and you follow me, but our industry analysts keep arguing for interest rates going down, and yet when you step out of the echo chamber of the industry, when you go outside to just economists and financial analysts outside of our industry, overwhelmingly they believe that there's upward pressure on rates. And because here's what you have a supply and demand problem. The government has to reissue $9 trillion of debt this year. That means they got to sell it and rebuy, and it matures and they got to resell it, right? That's going to put a ton of supply out for sale on the market, right? And then we have the additional debt, right? We just keep flooding the market with supply. And it's funny because earlier this year and late last year, we started to see foreign participation start to decrease. But in the last few months, as there starts to be global instability, once again, sovereign countries are coming to the bond, which is somewhat helping us. But you have problems here. You have oversupply. You have the government's, this big, beautiful bill is going to add more debt, to the U.S. debt, which the bond vigilantes will show up. They're going to say, and I've heard some industry analysts say there's no such thing as bond vigilante. Why they then in the next sentence describe exactly what it is, I don't understand that. But and then on top of all those things, you have inflation growing. Most analysts, whether in the industry or not, think inflation might reach 3% by the end of the year. That's going to be a problem, and that's before we have this spike on energy prices, which is an added problem. So to me, there's just a lot of upward pressure on rates, not downward. And if you're a loan officer or a real estate agent, you don't care. Don't whether I'm right or wrong or anybody's right or wrong. It doesn't matter. What you have to figure out is how to sell houses with interest rates at 7%. That's what you have to figure out. And that's the historic rate. Historically, if you look for the last 40 years, interest rates have averaged 7 to 7.5%. Now, what happened when we went from 3% to 8%, the consumer said, peace out, I'm not buying. I'm not that. I got screwed. I missed out. I have total FOMO. Oh my gosh, this is the worst thing, right? But then their memories fade because what happens, consumers don't look back at what they missed out 5 years ago. They have a window where they look back 6 or 12 months. And so now if a consumer looks back 6 or 12 months ago, a year ago, interest rates were like 7.5, 7.58. Today they're 6 and 3/4. They're pretty good, right? And so we no longer have to deal with that psychological hurdle, but what we have to deal with today is just straight affordability. And so our job is to solve for affordability, but thankfully it's not to solve for the psychological, wall we have to climb over, which is a huge benefit.
I was going to ask you to end with a kind of a headline, a non-ChatGPT headline to kind of summarize what a good takeaway for a loan officer, but you just kind of did.
Yeah, exactly. Don't pay attention to interest rates. Just sell into the market what you have right now. There's plenty of people that can buy, solve their affordability problems and their solutions. Become a master at those solutions. Become a master encouraging people the benefit of home ownership. How you create wealth through real estate, you master those things, you make the why big enough for your buyers, and then you're going to solve the affordability problem. Even if that means that, gosh, one of the two married couple, one of them has to get a second job, or they have to cut back on going to Starbucks every day. They can figure it out, and it's worth it to create the wealth, because as we know, homeowners have 41 times the wealth as renters in America, and so it's critical that we get everybody on the path to home ownership.
Yeah. Let's move on to the next one, Ron.
Yeah, let's go. This is great.
If you didn't catch the beginning of this, so every week we're going to come at you with 3 topics. They'll generally fall into 3 different categories, but we might have 2 in one or whatever. But one that's what's in the news, that's mortgage, housing related. Number 2, something marketing, branding, AI. We're going to lump those together, and then the third one, more of a sales coaching. And that could come from an aspect that comes from either strong from me, marketing, branding, or strong from Ron, which is sales, growing your business, efficiency and operations, and so on. But the next one I wanted to talk about was video and AI. This is something that all of us have seen a rise of in just the last, year and a half, with AI automated video editors. And it's something that just sometimes rubs me the wrong way when I see so much of this on social media these days. AI has changed the world, and it's going to continue. And that goes for video creation when it comes to social or whatever else. There's tools, and Little Nessie uses all of these tools that I'm getting ready to talk about, but AI tools that automatically add, you've seen it, the captions, the AI generated B-roll, sound design, where transitions are happening every 3 seconds, and you hear the click or a shutter button or whatever. And it's made it so easy in today's world for a loan officer or for anyone in any industry. But easier doesn't always mean better. Just because you can doesn't mean you should. Um, I use a handful of AI different platforms, from CapCut to Captions to all the, and that's for video editing. Not talking about generative AI as far as ChatGPT and Gemini and so on. But we've got all these new video editing tools that basically makes anyone and everyone a video editor, so anyone can do it. But a lot of the videos that I see these days, you've heard a ton of people on stage, on social media, talking about how to be authentic, how to be yourself. But to me, all the videos right now are looking pretty much the same. You've got a talking head video where they're talking about real estate, mortgage, and it cuts away to 2 people shaking hands, or someone signing paperwork on a desk, or cash falling from the sky. You've got all these tools that I've been doing video now for 18 years, before social media was as commonplace as it is now, and especially before AI was around. And when I first started editing video, I'd be embarrassed if you ever saw them, because they were dreadful. Think about it this way: probably most people watching this has created a PowerPoint. Do you remember the first time you started creating PowerPoints, and you opened up the tab with transitions? You would see all of these circle transitions, star transitions, mirror flip transitions, and all of that stuff. I think we've probably all started out at one point in our careers where we were building PowerPoints and we got transition happy. I put that kind of in the same vein of what the everyday common AI video editing tool is doing right now. You can click a button and it will cut out the pauses. It'll cut out the ums. It'll cut out the ahs. It'll add transitions. It'll add that B roll. But for me, it kind of makes me, for me, it doesn't add too much value. It almost, in some instances, and quite honestly, in most instances, makes it, I think it detracts from the video a little bit. So the flow, the over editing, the where every visual comes in, it has a sound effect or a graphical element or whatever it might be. To me, you're losing your message and all of this noise from what AI is doing. Is it impressive? Yes. Is it always helpful? No. For me, when I see micro human elements in your videos, some ahs, some ums, some pauses. That's what AI is stripping out of it. And I'm not saying that what you put out should be crap, where you're not really giving a good message, or it's lost with your comfort level, or the lack of comfort level that you have in front of the camera. So I'm not saying go the opposite side, but I'm also just cautioning. A lot. I follow a lot of loan officers on social media, so I see a lot of them, a lot of real estate agents, and I feel like sometimes the message is being lost. Um, to me, a most social media videos, which I follow a lot of great people, most of them are talking head videos, where it's just like you're holding your phone up in front of you. It's a talking head type video. To me, a talking head video without bad B-roll is often better than one with all the random stock footage with cash falling, and you've seen them, the banks dropping from the sky and so on. So my biggest encouragement, and part of this is we're going to start to give tips and helpful tricks on how to, not just video, but marketing in general. But when it comes to video, think quality over quantity, not at the sake of quantity. But if it doesn't really enhance your story, then leave it out. To me, AI is a tool. It's not a shortcut to great storytelling. Using using all these effects, these transitions, these noises, the B-roll, treat it like seasoning, not your entire meal. So captions, absolutely. But I do see a lot of people get carried away with captions. So I'm going to end my rant there, and stop yelling at you, but aim for clarity, aim for connection, aim for storytelling. It seems to be a buzzword, but keep your message front and center, and edit your videos with intention, and don't rely 100% on AI. Will it get there one day? Probably, but let it support your vision and not define it. Ron, do you have any comments?
Yeah, I have a question, David, and this is great stuff. You know, one of the things I know you're big about is protecting your brand, creating a brand, protecting a brand alignment. When somebody uses all these effects, you know, like a bank dropping from the sky, how does that impact their brand? And how would you coach them to always be in alignment with their brand and preserve it? And why is that important?
Good question. I don't think it goes in the. I don't think it fights against their personal brand. Um, but your personal brand is built up when you create engaging content, conversations online. You've got different aspects of your personal brand. You've got your visual brand, right? Which often gets thrown by the wayside. Your logo is not that important, which I'm not saying it's more important than your reputation and being authentic and all that kind of stuff. But your brand kind of has several different aspects to it. And so, if there's someone out there that is creating these videos that I'm talking about, I wouldn't say it's necessarily damaging your brand, but at what level do you want your brand to get to? And are you being different, or are your videos just looking like everyone else's? Are you using the exact same chat GBT formula with your script writing, or are you just winging it or whatever? So I wouldn't say it necessarily um, badly affects your brand, but if you're wanting to step it up and have a significant personal brand, then you have to start thinking outside of the box and be unique.
But couldn't it be if you're somewhat serious by nature, you know, and then all of a sudden you start having all these silly, you know, effects in your videos that would contradict, you know, what people understand or see of you?
Yeah, I think so, but there's plenty of people out there that are silly, and maybe that's authentic to them. So I'm not drawing a
Right.
hard line in the sand,
Right.
but the TikTok dances are still a thing, and if that's your thing, that's your thing. But just stop trying to be like everyone else. I think that's
Yeah.
where kind of I learned that earlier on in my career. A lot of people asked me who my inspiration was, and they were happy to, or they were surprised to hear that typically my inspiration for how I went about branding was no one else. There was no other example I could give them in the mortgage industry that I was using as inspiration for what I was doing from a branding perspective. So don't always look at all the mortgage influencers and try to copy what they're doing. You can be inspired what they're doing, but do your own thing.
You know what, David? This falls so much in alignment with. I think his name is Bruce Gerke. I think is his name, from JD Powers, oversees the mortgage data for JD Powers,
Uh-huh.
and he has a really. And I apologize if I got the name wrong, but you know what he says? He goes, as regards to technology, he goes, look, your customers aren't comparing you to the peers in your space. Like if you're at cross country, your competitors aren't comparing you to whoever's best in the space, United Wholesale Mortgage or Rocket, whoever is great at technology, right? They're comparing you to the best companies with technology. They're
Yeah.
comparing you to Amazon and Zillow. The same thing goes in the marketing space. You know, your customers aren't comparing you to who's the number one, you know, to Shant Benosian. They're comparing you to who the top influencer is, and that's the bar.
Yep.
Would you agree with that?
Yeah. 100%.
Yeah, and you know, one of the things I know you and I talk about, David, is that we're both huge believers in the future of AI and AI tools. We both use them extensively, but the trick is to try to use AI tools without letting people know you're using them. Like that's one of the tricks, right? Like so when if you're having Chat GPT or whatever AI tool you're using help you write an article, don't use all the dumb Chat GPT emojis or its punctuation or all its antics if that's not what you would do naturally, because it gives it away immediately. Oh, look, they have green check marks. I've never seen them use green check marks. Where did that come from, right? Or they have an emoji for a house, or you like like all these weird images that where'd that come from? That's not you, you know.
Yeah.
And so you almost gotta leverage the tool 100%, but sanitize its fingerprints off of your work. Would you agree with that?
I would, but we've also chatted about this recently. I forget what the number is, what the percent is, but it's somewhere in the 70% range of all content now is AI generated. I forget exactly what the number was or if I stated that exactly right, but you get my point.
Yep.
I've asked that question of how do you make AI still feel human, which is a valid thing. But at some point, if we're at whatever it is, if it's 60, 70, 80, I forget, but if 70% of the content on social media is AI generated, at what point do people not care anymore? I don't know.
Yeah.
It-
I
I,
don't
I think the point that they'll care at is when the human element is stripped out. Does that mean that AI cannot have a human element? Yes, but I think it also can if you're the one generating it.
Yeah, I think the scary thing on that statistic is not only how much content online is generated by AI, but how much content is actually engaged in by AI. So, you know, the now the auto replies and messaging and likes are done by AI bots, not by humans. And so what we're starting to have is a completely humanless internet, which is a really interesting thing. And the question is it good or bad? Now, one thing, David, when you talk about, where to be human, some things you don't need to be human on. You know, like, do we need to make a shovel human? No, right? It like, do we have to the sharing information, teaching knowledge? Does that have to be superhuman? No, it's just a function. And if it's a function, it doesn't necessarily have to be a human function. But humans just have to be, available and have to be present for the human functions. And we just need to discern which is which.
Yeah. You know what? Random thought. I just thought of I no longer have to take the CE courses, being that I don't directly work in the mortgage industry. But all those CE courses you'd have to take on a monthly basis or whatever at any mortgage company, where the company would pay for some LMS where they would have all these different video guided
Yeah.
courses where you see a person, they're talking, and at the end of the course, you answer 5 questions, 10 questions, whatever. Those videos might as well have been AI because the actors horrible, the delivery not great. That I'm sure I know a lot of companies have started doing that for training modules, but those are now becoming AI. That's not saying that I accept the fact that every person you see on a screen in 5 years will not be real. It'll all be AI, but it's headed that direction. Will it? I don't know how close it'll get.
I mean, up to and including movies,
Yeah.
right?
Yeah.
and commercials. Now, David, I know this is a topic for another day, but your thoughts on using avatars and AI voice bots to create lifelike AI videos?
Yeah.
What do
Good plug, because that's one of the that's one of the services that Little Nessie is working on. I'm a fan of it. So a lot of people in my position, marketing leaders, I'm connected, I'm friends with a lot of them, and the consistent thing I hear is social media is all about building community, and I agree with that. However, uh, I'm going to take a slightly different approach. For me, I love social media. I'm on it every day, and I was on it every day before I owned the company that I do now. Um, but I never really used it to 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 increase my direct community. It's a different kind of thing. I I use it. I treat it as entertainment. I love it, but I don't go on there to make friends every day. So everyone uses social media differently. Some people, they find value in that community. They've made friends and are close friends with people that they've strictly met on social media. I'm not one of those people. Um, shoot, my wife accuses me of doing this all the time, trying to give so much context that I forget what the question actually was. What was it in a nutshell?
David, we're talking about using avatars, voice bots, creating
The,
videos. Like
okay,
go ahead.
so I'll wrap it up. So for me, I don't think I have a problem watching someone if it's a random person. I'm like, if they don't have a, if it's not a movie trailer or whatever, I'm tuning them out. But if it's someone that I know that uses an AI avatar, and I can tell that it's them and they're not just hitting a button and it's just spitting out a video every day, if I can still tell that it's them, I don't mind it. A lot of people, a lot of marketers that I know personally speak against it, but I'm not one of those people. So I think there is a rise in that. It's gonna continue to get better, to get more believable. But even if it's not 100% believable, as long as it's still my voice, personally, I don't care.
Yeah, and David, I would say, the internet, social media has several purposes. If the point is human connection, then obviously, an avatar can't make that. But the point is education or information, then an avatar can. And I'm fresh off of the gathering last week, which is a great conference, and about a third of the content was on AI. And I can tell you, we listed at least 15 companies that have AI avatars and voice agents already deployed in their customer service and Salesforce, and it's expanding quickly. It's just the case. And if you think about it, if you think about it this way, most people, I kind of look this statistic up. I would rather talk to a voice bot when I need help on something than a human, right? And then I want to talk to a human once I'm mad. Like once I'm mad and I'm stuck, a human better show up. But before then, the voice agent is probably going to do a lot better job than the human,
Well, let's
especially the
be
human in a foreign country I can't understand.
let's be honest. So basically, you're saying you're always going to be talking to humans and not AI bots because you get mad a lot, Ron. You
That's
got to
not
get
true.
control of that temper. I'm kidding. You're one of the most stable guys that I know. I don't think
Until I
I've
start working
ever
with
heard
technology.
Ron raise his voice one time in the 6, 7 years that I've known you. Not once.
Yeah, there you go. But
So
you know what I mean?
let's lean into the infinite workday and we'll end with that.
This is such a great topic, David, and I don't, it was so compelling that we felt the need to talk about it. And this all comes from a Microsoft study, and Microsoft studied trillions of inputs from their Microsoft 360 software of when people log in, what they do, and when do they do it. And in looking at it, they said, "Oh my gosh, people are just working 24 hours a day." I mean, that's what it is. And so they came up with the term infinite workday, in that we never get time off. And as part of that, they came up with a bunch of really interesting statistics to support this infinite workday. Like, you know, I don't think it's a big deal. People get 117 emails a day. That's not a big deal. Or that they get 100. This was interesting to me, that actually once it gets to 8 o'clock, like before 8 o'clock, the preponderance of communication is email. As soon as it gets 8 o'clock, the preponderance of the communication is MS Teams. Now you got to remember this is in a Microsoft world, but that people prefer Teams over email. That was a really interesting growth that I didn't expect to see.
Why didn't you, Ron?
Well, I don't, because I'm just old school email. Matter of fact, I still put stamps on letters and hope for people to reply. No, I'm a big email guy. Although, I'm a pretty advanced Microsoft user. Like I do all my calls on Teams. I would never pick up the phone at work. I'd just Team somebody. But Teams is by far preferred during work hours. Which means engagement, like real engagement, right? Like not like I'm gonna send you a static email and you're gonna send it back to me. I'm gonna FaceTime you or I'm gonna get you right away. But it was much bigger. And then, it's 57% of our meetings are ad hoc or without any calendar invite, which generally means they're useless, by the way. And then it went on to say in this thing that the average worker gets interrupted it's like every 1.75 seconds. And that interruption is a ping or a notification or an email. It's something. And it happens over 275 times a day, just totally getting them off schedule. And here's another thing. 29% of employees dive into work, after regular scheduled hours. It's actually we have a different statistic here because it's actually over 40%. Proportion of active employees that dive back into their number. Yeah. So this is just suggesting here a third of workers are working, through 10. Something like, by the way, 1 in 5 meetings meetings after 8 o'clock are up 16% year over year. Is that crazy? They're up 16% year over year. And workday starting at 6 a.m. is up like 40% year over year. Isn't that crazy? So people are now getting pinged 24/7. Here's the thing, and David, let's get your feedback on this. We had the pandemic and everybody went work at home. And everybody was super productive because you know what? We were on lockdown. We had nothing else to do other than be scared out of our wits. And so we're in rooms like my room right here, and we just sat all day and we worked because it was a release. And we got tons done. And productivity in the United States went way up during the pandemic. And the social engineers were like, "Oh, work from home is the elixir. This is great." But then the pandemic left, and people, along with having excess cash from all the cash disbursements, all of a sudden had freedom to move about. And you know what? They were logging in, but not at work. I think if you're working at home, how many people go and fold a load of clothes or go grocery shopping or go take the dog for a walk or go pick up the kid? I know when I work at home, somehow I get a bunch of honeydews. It's unbelievable. Like my wife will go, "Ron, can you check on the gardeners? They're supposed to be here too." Or, "Ron, can you let in," or whatever. I'm like, "I'm working. No, I can't." But because I'm at home, it's okay. And so they saw productivity drop, right? Went from shooting way up to now productivity dropping. And so many companies, Amazon, quite a few companies said, "Hey, look, return to work." Return to work came the cause de célèbre, right? Return to work. You're no longer productive at home. Return to work. But you know what the truth is? That's false in that today, yes, some workers may not be at their computer at 1:30 in the afternoon because they're walking the dog, but they're on the computer at 8 o'clock at night, 8 to 10 o'clock at night. They're working more than ever. Employees in the United States are working more than ever, just not as regularly as it used to be, not in the same cadence. But that bears out as productivity continues to increase. So productivity is increasing through technology, but workers are still putting in a ton of hours off the clock. And this is a really interesting topic. Dave, your thoughts?
I worked at 3 different companies during COVID, regrettably. But
Unintentionally.
unintentionally. No, not unintentionally, regrettably. But reported to the CEO of each company, and every single one of them, after the initial lockdown and shock and all that kind of stuff, every single one of them hated work from home. But you're saying the productivity skyrocketed, and I know every CEO's perspective was kind of culture, office culture.
Yep.
But where's the tension there of productivity being super, super high, but CEOs wanting employees, whether they were outspoken about it or not, wanting their employees back in the office?
Yeah, productivity spiked up and then dropped down. And but productivity is only one metric that you might concern yourself with, right? Because there's something to be saying about the synergy of being, elbow to elbow in the office, and
Yeah.
some of the magic that can happen around the break room table while you're eating lunch, things that, and then the human connection. Now, as technology gets better, technology like video conferencing, 3D video conferencing, artificial video conferencing, right? There's other, and companies are learning how to get that connection now, even with remote workers. But there's all sorts of things that goes to the culture, but you can create culture remotely. It's if you have a weak culture that you're so concerned about being face to face all the time. But I do believe that better innovation happens face to face. But it's something to struggle with. But the same thing is that the problem here is, David, is that we're going to have a whole generation of workers burn out because they're working 24/7. Because previous workers, I remember when I got my first beeper, I was like 18, and at one point it was going bananas one day, and I threw it out my window on the 405. I just quit bugging me, and which is dumb because I just had to pay for it. But anyway, and that intrusion into my life made me really frustrated. And today, look about it. I mean, our bosses or our coworkers text or email us all day long, and and David, as you know, I'm the worst at it. Like my last few years in the office, I kept trying to tell myself, I'm not gonna, email or text anybody before 6 o'clock or before 7 o'clock in the morning. But I get up early, I get work, and I just get a lot done. And unfortunately, I just flood people's boxes. And what I was telling people is like, you got to be up the same time I'm up, or else you're behind the curve, which was totally wrong. Now as a more mature leader, I would try not to do that. But I'm still in recovery, by the way.
Ron and I are on completely opposite schedules. By the time he's waking, because we're 3 hours difference, but by the time he's waking up in the morning, I'm typically going to bed.
That's so
I'm
true.
a night owl, and when I wake up in the morning, I turn my do not disturb on. I think it turns on 11:30 or 12, and it comes off at 8 or so. But by the time I wake up, I've got a handful of messages from you, Ron.
I don't even see. This is it. I don't even know about Do Not Disturb. I've,
What?
I've, I've I've never used it in any for, any
All
format.
right, we gotta educate you. Yeah, so it's you.
I
I
guess I've
mean,
used it in a hotel, with a little
so
thing hanging on
every
the door.
every night, my phone will not receive notifications. I think it was 11:30. I think I changed it to 12, and then it turns back on, or do not disturb turns off. I think it's 7:30 a.m. or 8 a.m. I'm not sure, but you got to turn that
Yeah.
on. Anywho,
Well, I don't have to worry about Do Not Disturb because my notifications are silenced anyway.
yeah. And then there's a couple others here that you want to highlight.
Um, I think we got them. I think we got them all there. Get the idea. The key thing, the thing that closes up, if you're actionable, you got to protect your own psyche and your own health. And being just the hours warrior isn't necessarily the best for you and your company. And so figure out what's optimal for you, how to set boundaries, make sure that you're supporting all pillars of your life. But you got to do it by design. You can't just you got to part of it's life planning, part of it's just time management. What do you allow and what you don't allow, and make sure that what you allow aligns with what's most important to you. David, when I coach people a lot of times and they're unhappy, I ask them to prioritize what's the most important thing in their lives, and they can prioritize their different pillars of their life or the different buckets, whether there's 5, 6, 7, or 8, however they divide it up. And then I go, okay, give me a time tracking. Let's see how that lines up to what your priorities are. And they're almost always upside down. Like they're almost always contradictory. And so, this creep of working 24/7, if that's not your goal in life, well, then you're going to have to control it, and if you control it, people respect you. And if you don't, people will just abuse you. Simple as that. But you got to be intentional about it.
Yeah. Well, let's end at that one. We covered three topics, like I said at the beginning, and halfway through. We're going to come at you every Thursday at 3 p.m. We'll have a second podcast where we bring in an influential person. I forget what day we're going to go live, but that'll be another month from now or so. But we'll bring three things to you every week. One, newsworthy, what's going on in the industry, and hopefully some great takeaways. And we're going to change up the format to where you can really put what we're giving you into action into your everyday business from a news perspective, and that'll mostly come from Ron, and then marketing, branding, AI. That'll mostly come from myself, but Ron's better at AI than I am. And then one more. So this is our first podcast live, and we're looking forward to do many more.
That's great,
So,
David.
all right.
Yep.
See you, Ron. See you, everyone.
Thank
Thanks
you.
for joining.
Yeah.